Alright, welcome back. Let's try something new. I'm gonna show some skin. That's what you guys want to see, I know it is. This will be my new... I'm gonna do this as a new setup where I have a standing desk because people want to see my face, I guess. Builds trust, I don't know. But I'm still going to do screen share most of the time and show you guys the charts and everything. So yeah, that's how I look like. Kind of like this. Alright, so there's a lot going on in the markets as usual, but there's a pivotal moment right now where we need to really time out when Powell's going to pivot and capitulate. The markets rallied a little bit last week. I'm going to talk about that. First of all, not financial advice. Consult your licensed financial advisor. Obviously, I'm not a financial advisor. Look at me. So, there's a lot of risk in the markets right now. I've been raising cash. You guys know we've been shorting. But bounces are in the game. Bear market rallies do happen. Alright, so the market rallied a little bit in the grand scheme of things last week. I kept my shorts on. I even added more shorts. I let some shorts expire, so I'm like really long. A little nervous, I won't lie. But let's take a look-see. Bitcoin and Ethereum, they bounced a little bit. I'll talk about the stock market and cryptos, everything. Just a 4-hour chart. Let's take that to a weekly. Ethereum did hit my blue line, which, you know, it is a nice bounce buying opportunity. Is it the ultimate low? We're going to get to that. It might be. It might not be. It literally all depends when Powell capitulates and does yield curve control or just stops raising rates. That pretty much signals to the market. And later last week, people were starting to figure that out. That's why the market rallied a little bit. Let's take a look at Bitcoin. It's a 3-day chart. Let's take it to a weekly. Almost hit my blue line, right? Yeah, I know these are not log. Here, log. Makes it look prettier. Yeah, I mean, my blue line was the COVID low. And I did say 20,000 was a nice buying opportunity. A lot of people said it on Twitter as well. So a lot of people are just going to play it off that. Is it the low? In a world that makes sense, Bitcoin should go to like 15,000, 10,000 or lower. But it literally all matters how fast the central banks capitulate and shit hits the fan. We're in a recession. We're literally in it. All right. Inventories on stores are just backed up. They're starting to do sales, and that's deflationary, right? The economy is contracting right now. People are strapped. People are still not going back to work because it's not worth it. And I'm going to talk more about all that. Here's Hex. I'd like to see more follow through here. Now, if this 3 count on this 3-day chart, Hex gets above if it gets above 6 cents, that's when, you know, it could run up easily towards 13, 14, 15 cents. Then it's going to hit some resistance. Now, that all said, I mean, let's take a look at the broader market here. The Nasdaq, you know, little bounce here on the daily. It's weak though. It's not that strong of a bounce. It's not like a massive rebound. Here's the thing, guys. If we look I'll blow up the Nasdaq here. Take it to a weekly. Psychologically, okay? Psychologically, people feel like they're down a lot from the all-time highs. In the grand scheme of things, they are not. But it already feels painful for them, and it's been 6 months of this. It fell 35%. Right now, it's at a... Let me zoom in. Let me see if I'm getting this right, because that doesn't seem right. From the all-time high, Nasdaq fell 34%. Right now, it's sitting at a 28% drop from the all-time high. Now, that, to people, feels like they lost a lot of wealth. 30%, right? This is just the indice. It's not individual stocks. Individual stocks are just wrecked, okay? Like ARK Fund and all that. Here are, if you look at individual stocks, they're down 60, 50, 70, depends what growth stock you were holding, but they're down more than the indices, right? So it's painful, and people are looking to get out right now. Because there's rumblings, they hear about a recession, they feel it, inflation's up, gas prices are up, people need the money. But at the same time, Wall Street is a younger generation. Like, they were kids when the mortgage-backed security crisis was happening. And they don't know what a bear market or a recession really looks like in a stagflationary environment, high inflation. All right? And I want to see the stock market drop to my blue line, or at least get halfway to it. Something like the Nasdaq. This is the Nasdaq Composite. I mean, I would look around 10,000, right? S&P 500. I would look to around 3,200, somewhere around there. That's where it should fall. Here's the problem. All right. Powell and the central bank they're not timing their plan out as they should have. Because if you guys remember, like 6 months ago, I said around this time they would be capitulating. But that means that they should have crashed the markets much further in order to do so. Because if they capitulate, like in July, that means they're capitulating with high inflation. And what that means is we're going to get runaway inflation while we're in a recession. And that is like a death spiral doom loop, because the bond market's going to blow up. That means yields are going to be spiking because the Fed has to monetize the debt. So they have to buy all the U.S. Treasury, okay? Because no one else is going to buy it, because they literally couldn't even raise like 2%. Now, the only reason the Fed is raising rates is so they could cut rates later during the recession they're causing, and they know that. The problem is they sort of dragged it out, and they didn't raise rates as strong as they should have, and they need to really tank the market, tank oil prices, and really do some demand destruction. That is super painful, and they have to do it quickly, but they're not. And the stock market's been falling in an orderly manner. I have not seen retail investors. I've not seen capitulation. It's just kind of like a slow motion, like waterfall. Like it's like we should have seen this. Like just straight up crash. Boom. And then the Fed capitulate. But no, we're getting bounces, and then it just slowly is falling over. And that's not what needs to happen to stop inflation and slow inflation. Listen, I mean, politically, they're wrecked anyways. Like, they need to just give up on that. And they need to do what needs to be done economically to fight another day. Meaning they have to crash assets. They have to tank real estate. They have to tank the stock market. The corporate junk market is still like getting a bid. That hasn't blown up. And they need to do this until something blows up, essentially. Retail investors haven't capitulated. They're still holding on. They're waiting for the bounce to exit. So what else? Tax receipts. Like, incomes are down now this year. Small business incomes probably wrecked. In the grand scheme of things, I just heard on a podcast that 70% of revenues for the government goes towards paying off the national debt, and just the interest on it. Just the interest. Okay? Well, if that gets, even if a 30% drop in that, which will probably be more because everyone is about, a lot of that is also capital gains tax and whatnot and investment. If it gets slashed in half, then the central bank has to monetize the debt, which means they print money and they don't give it to your average normie. No stimmies. What they end up doing is buying U.S. treasuries with it. And what's the problem with that? Well, hold on. This is the 10-year yield. What ends up happening is the yield, the bond market blows up, meaning bonds keep crashing, and then the yields just start spiking like you've never seen before. Like Paul Volcker style, right? Back in this, like from the early 70s into towards the end of the 70s into the early 80s. Well, you're going to see something like this. The difference between then and now is that the national debt is it's like unserviceable. It's unmanageable. And we don't exactly have an industrial base like we used to. It's financialized. And who holds all the U.S. debt? Japan holds a lot, and they're selling it because they're in their own, they have their own problems. I mean, they refuse to raise rates, and they're just printing, and they're literally in runaway inflation right now. So they're forced to sell U.S. debt or treasury bonds, right? Which further makes U.S. yields go up. Who else owns a lot? Europe. Europe is in a whole, they have their own issues, right? With Russia. They're not going to get gas maybe this winter. They have massive inflation already. And I feel like the EU is just going to break apart. I mean, is Germany just going to subsidize Italy, France, Greece, and Spain and all those countries? No, at the end of the day, everyone is, they're going to preserve themselves. They'll be out for themselves. And the strain from Russia, right? With natural gas, oil, and all that, they can't weather that storm. So they've already capitulated, and through other banks and means, they're just gonna buy Russia's oil anyways, which is funny. But as things escalate, as they seem to be escalating, because I believe that globally the powers to be, they need a global escalation and fighting, right? To justify all the money printing in wartime. They're going to call it wartime inflation. And is it going to work? Probably not. The masses are going to freak out. This generation of people are not like our grandparents. Those people canned food and had gardens and lived a very frugal lifestyle, and they were very hardworking. The people nowadays are just, I don't want to go into it. But what I'm trying to say is, it's a sovereign debt crisis for everyone. So what happens when every major company in the global economy has this going on? They need to shift blame, and they're going to start taking each other's resources in the macro historical grand scheme of things, right? Now, as of right now, to trade and to invest, it's a very it's a very volatile time. So right now, our yield's gonna spike out of nowhere, and this little bounce in the stock market is gonna just sell off rapidly, this week. Is the Fed gonna pivot? When is Powell gonna throw in the towel? I think, well, it all depends, right? Because oil's not going down. Where's oil? Here's the FANG index. It's like everyone's buying the dip right now. They're like, oh, we're going to get a huge rally and a rebound. And they might go a little higher, right? Where is oil? I don't know. Can't find it. All right, here's oil. This is just a daily chart. I have a buy signal on oil. I'm not buying it. It's so high. But it tested 100, right? And now oil wants to rebound, go higher. Half the inflation, besides supply chain issues and money printing, literally, and people not working and being productive and producing, right? So there's supply side economics and demand. The Fed could only tackle demand, but they can't do anything about supply because they can't print oil. Well, oil's shooting up right now. It's going to shoot up. That's like half the inflation. So how is the Fed going to tackle inflation if they can't bring commodities down? And what I mean by that is just developing right now. So the G7 had a meeting, right? The Western powers. And for one, they're targeting Russian gold. Okay, guess what's going to happen? As they targeted the ruble, you know what happened to the ruble, right? It's like the strongest currency in the world right now. Well, now they're targeting gold. That's super positive for gold and the oil price. But look at this. G7 aims to raise $600 billion to counter China's Belt and Road initiative. One Belt, One Road. Well, what's that about to do? That's about to make commodities go up even more, which creates even more inflation. While they're trying to push inflation down, it's like they're they want their cake and they want to eat it too. Yeah, look at this. Gold up as G7 nations plan to ban gold imports from Russia. This is 5 hours ago. All right. I mean, it's like I don't think they know what they're doing. It's like they really don't know what they're doing. I used to think they had so the central bank's losing credibility if they don't fight inflation or at least get it back down and raise more. But I think they're scared to raise rates more because it's tanking the economy. But that was the only way that they could bring inflation down. And bringing inflation down is only temporary. I'm talking buying them a few more months, and then they could raise rates, and then by raising rates, they're reloading ammo so they could fight the recession they're putting the economy in the next, that we're in right now, that's going to really accelerate in the next couple months. Another thing with the market is people are betting right now that Powell is going to capitulate, do yield curve control, and stop raising rates and cutting rates, and stocks are just going to go back up and they're going to do stimulus again. Eventually they will do that, but here's the deal. Corporate earnings are about to get annihilated just from the past 2 quarters. So there is no reason to buy stocks. Corporate earnings are going to be bad. Inflation's still going to be running north of 5%. It might come down a little bit from 8.6 or wherever it's at. It might come down to 5% at the most, I believe, but I doubt it's coming any lower, especially right now with the G7, what they're doing with commodities. And you think China's going to like this? China could just dump $1 trillion worth of U.S. treasuries. And you know what that does? That's like an act of war. The 10-year yield, and that's short-term debt. Yields could just spike 5% or something insane. And that's all it takes. It'll crash the entire stock market and everything. And I don't think China's gonna like that they're doing that. They're literally creating an alternative to China's big plan of providing the world with consumer goods, right? With their One Belt, One Road and commodities. I don't think they're gonna like that, right? So what can they do first? And for one, China's on Russia's side. They could just dump a bunch of U.S. treasuries. And then what? See, that's what happens when your economy is 30% financial and it's not real. Financial is a byproduct of real producing, manufacturing real things and goods. China and Russia produce things, and they have commodities. The U.S. is rich in commodities, but we don't make anything, and we don't even have the skill and labor to make anything anymore. We just have a bunch of college kids who color their hair and don't know what, I can't talk about it, but you know exactly what I mean. I mean, just after this weekend, I want to see what the big deal is, guys. Did they just neuter themselves with the Jackson, Anyways, I digress. Oh man. What else? I had a few now. Yeah, so right now, there was a lot of short covering last Friday, especially before expiration, right? So that's a reason why you're going to see equities pop. That's why we saw equities pop last week, and right now the futures are up. Where's the futures at? Dow's up 81 points. I mean, that's not a lot. It was up a lot more when I started this video. It was up over 100. S&P is only up 15. Nasdaq is only up 66. Listen, I think this week, next week, it's just the markets are gonna tank. Equities are gonna tank, guys. right now it's just Pavlov's dog, right? It's basically this generation doesn't understand what's going on. No one's seen and it's multiple generations. No one's seen inflation and what it could do, especially to corporate earnings and the debt spiral we're in, and the geopolitical risk globally is like through the roof. We've never seen anything like this in our lifetimes, with superpowers literally effing with each other. All right. And like I said, this is kind of like, I'm not saying it's planned, but it's the fourth turning type stuff. It doesn't matter if it is or isn't. Like it is what it is, right? And it's happening. So we could see a sell off like soon, anytime. Like the smallest thing could just cause the equities to like dump hard. And I know everyone right now is thinking buy the dip on equities, on growth stocks, on these stocks that fell, that are way oversold. But listen, I mean, zoom out. Look, here's the Nasdaq. This is not. It's not that much. In the grand scheme of things, it's really not that much. Here's back in. Here's the .com bubble. Look how bad this was. And look, the Nasdaq was nowhere near as high as it is right now. How much did it fall? 78%. Nasdaq has only sold off 35. At least get another 20% drop to stop inflation. Do the reverse wealth effect, right? So everyone's gonna see their portfolios dump and retirements dump. I do think a lot of people are gonna panic sell, and we haven't seen that. Boomers are probably gonna panic sell. I mean, come on, guys. Like they had a great ride for many decades now. They're sitting on so much equity wealth. It's like insane. Like you're greedy at this point if you don't like just take your money and run while you can, right? So I do think a lot of them are just going to capitulate soon. Another 10-20% fall in the Nasdaq, and we're going to start seeing like some serious equity crash here. And that again needs to happen. I just think that the powers to be need a good excuse. That's another reason why I think they poke the bear a lot. They want him to react. They need an excuse for the stock market to drop. And the excuse for this, and they need that to happen so inflation comes down, so they could reinflate the economy and the stock market later. Now, I'm not saying they're going to reinflate the stock market to new all-time highs. They just need to reinflate the economy later so the pitchforks and torches don't come out, and for, re-elections and shit like that. And that's all it is. That's how these people think, and that's all they're doing. And unfortunately, that's how the managerial class looks at everything. How can they manage things so they stay in power in, tar and feather? So, but right now, they need to sacrifice something. The Fed is going to lose credibility no matter what. At least stop inflation. Because of the bond market, listen, if they don't stop inflation, if they don't get commodity prices down, which is crazy that they just did this thing with the G7, because if they don't get commodities down, if they don't get oil down, like back to at least 80, if they don't get the DXY like rallying again against other global currencies, I don't know, guys. If they don't stop inflation, what are they going to do a month from now? What are they going to do 2 months from now? When we're in deep recession, the stock market will crash anyways. The only thing like right now is like, are we going to get a nice bounce or not? Like that's all it is. If I was Powell, I would I don't know. Like if they let inflation run hot for another month, and I know the cure to high prices is higher prices because people run out of money and savings and they just can't buy things anymore, and then prices on their own come down. I get it. With oil going up, I guess that here's the thing. It's inflationary at the same time. If all your discretionary spending goes into your gas tank, I guess it'll bring down the prices of everything else. But I mean, they got to get more rate hikes in so they could save the economy like 3 months from now when they do pivot and capitulate and start lowering rates. Because if they can't lower rates from where the rates are at right now, because we're damn near like, well, I don't know where rates are right now, but they're below like 3%. That's all that matters. If inflation's running at 8.6%, which really means it's running over 17%, they have to get real rates like to that high to stop inflation. They already know they're not going to be able to stop inflation. They just want the new normal to be like 6% inflation year over year, which is insane because everyone's going to be poor. But, I mean, we knew everyone was going to be poor anyways. I don't know. It just doesn't make sense what they're doing. Like, if I was them, I would, like, if I was in their shoes, if I was in their position, there's so much more air they could let out of this bubble so they have more ammunition later to buy more time. And not just that, I mean, if things actually do heat up, right? With Europe and Eastern Europe and now China, right? Let's take a look at the news. Not this news. Where is it? Here. U.S. Indo-Pacific chief sees largest military buildup in Chinese Army's history. I mean, they just launched their third like super carrier, which carries a bunch of jets and everything. Yeah, the writing's on the wall. Let's take a look at the news, what's going on. So, also, it's very important to see what India does. And India they need energy, and they're kind of I always view them as neutral. Of course, they don't, but I think they're going to take that Russian oil or whatever. Oh, yeah, another thing with OPEC, right? So, from advanced, like, people who really watch oil and energy, it's like their career and they manage billions and a lot. They know that OPEC output is pretty much maxed out and they can't bring any more onto the market. The only way oil really does go down is if massive war globally doesn't break out and the US goes into severe like recession, right? Because people stop just driving around. They only go to work and then back home. And then demand actually drops massively, right? But the problem is with this, they're still talking about the new energy czar for this administration in the U.S. They want to still transition to some like part green and EV and all this bullshit, which is not feasible and it never will be. But they're not reinvesting in oil exploration, oil production, and refining. There's a halt on that. Matter of fact, they're not even letting people invest in refining and exploration and more extraction of oil, right? Drilling, which means we're bringing future output into the present, meaning because oil, I'm not saying it's finite, but that you have to keep reinvesting into it because you do have to drill deeper and deeper to get it. I'm not saying there's plenty of oil in the world, you just got to go deeper. And technology, it advances and we can do that, right? But we're not investing in it, which means even if the current governments capitulate and they go back to oil, which is funny because in Germany they're already going back to coal for electricity because they got rid of their nuclear and everything else. They thought they could rely on, Russian gas, natural gas, and windmills. Yeah, that's why they're in such big trouble. Anyways, but the U.S., we've put a halt on all that, right? So now we're a couple years, if not 3, behind. It's going to take another couple years if they capitulate for investment to go into it and actually find more oil and then drill more wells and those huge ocean rigs out there. I mean, those take a lot of money to build and then a lot of money to bring out into the ocean, and then they have to drill without hitting a gas pocket and blowing up or whatever. So yeah, we're really in a world of hurt here this decade, guys. And on top of that, I mean, geopolitically, if things go kinetic or whatever, yeah, how do you? I mean, you can't have electric tanks. And not just that, though, all the EV shit and all those batteries and electric, that's all mining and very oil heavy intensive. I talked about it in my last video. Like, dude, these people are nuts. They don't know how the world works. I don't know, guys. By the way, this 2030 WEF shit, it's already done. It's not gonna happen. It's a pipe dream. Hedge fund CIO, how will the Fed do QT? Each crisis has increased markets' dependency on Fed liquidity. Right. Oh yeah, we're doing quantitative tightening this month or July coming up, right? How? We're already in a recession. I guess, like, it's hilarious, right? They're so behind the curve. Like, the central bank is so cornered. They can't, like, they're doing quantitative tightening, supposedly. Gonna raise rates even more, supposedly, to bring down inflation. Meanwhile, the economy is pretty much slowed down to a halt already. And like I said, they need to do more so they could kind of save the economy later. I'm telling you, if they capitulate without another rate hike and doing some quantitative tightening for at least a month, and the repo market's already over $2 trillion, Powell has to stay strong for at least one more month so they have some ammo to save the economy, like in Q4 of this year or the end of Q3 at least. And if they don't, they capitulate this early, I mean, we're just gonna have runaway inflation going into like Weimar Germany hyperinflation style stuff. And any deflationary time frame will be very short lived, a few months, and then it'll just be inflation again. And every time this will happen, this ebb and flow of inflation, then deflation. If you zoom out, the trend is higher highs and higher lows on the inflation side of things. And this destroys everyone and the economy, and it does it really, really quickly. And that's why I'm just surprised that they haven't raised rates faster and let the stock market dump even harder. It's crazy. Home showings across the U.S. plunged 24%. That's quick. What did I tell you guys? Mortgage rates remain elevated. Here's what's funny, right? Like, people think like, oh my God, home values dropped 40%. This means people are going to come in and start buying. How are people going to have money to put down on a home if inflation's eating away at it? If their stocks and retirement crash, and I mean, millennials, like, they don't have money. They're all broke. Crypto tanked, right? Yeah. So where's the bottom going to be for real estate? Not just that, you got to get qualified for a high interest rate loan to buy a home, right? So even if home prices drop like a lot, like 30, 40% or whatever, the rates are going to be much higher, right? They could be 6%, north of 6%. Okay, well, who's going to have the down payment and a high enough paying job at some point? So if stocks drop another 20, 30% and people just don't have savings to even put down a down payment, I don't know, guys. It's pretty bad. Authored by Mike Shedlock via mishtalk.com. Inflation expectations and treasury yield. So 1 year treasury yield has really spiked. Here's another thing. Inflation expectations. So mainstream media keeps screaming like, oh, look, the average American, the consumer, has a lot of savings. That's only the top 10%. The top 10% have a lot of savings because they took profits from the stock market and maybe crypto. Everyone else is wrecked. They have no savings. They're really struggling right now. And again, if inflation even just stays above 5%, people are really struggling, like really bad right now. And they don't, like, Wall Street hasn't figured that out. It's only the top 10%. And probably because they're in their little bubble, because they are the top 10%, right? So inflation expectations are not dropping at all, which is really bad because people are, well, they're going to cancel vacations this year. They're going to just spend less. And they have to. They have no choice at this point because prices are so high compared to just a year ago. By the way, all of 2021 gains have been pretty much wiped out, even on equity. So if we look at the Nasdaq here, where does 2021 start? All right, so between my two white dotted lines is 2021 on the Nasdaq. It went up 30% in 2021. All right, all of that is wiped out. So all of last year's gains are wiped out. And we just had what? Pretty much 183 days of downside, like 6 months. All of this year, pretty much, 2022. So investors, for the past year and a half, it's been a year and a half where your portfolio it's not making new all-time highs. I mean, okay, so yeah, in 2021, it did if you just sat on it, right? But for 6 months, it's only been going down. So you have to think to yourself, what is your average normie thinking? Is everything going to be all right? Or are they getting itchy fingers here to maybe sell and just take a break? I would, like, if I went long on that COVID dip or anywhere, or if I was a boomer and I bought like a lot of stocks back in like from the, or anywhere between 2013, 12, even till 2015, if I was up this massively on individual stock, well, here's what's funny. Individual stocks are not up for them. But if they just bought the indexes, right? And they were extremely diversified, like, what's his name? Tony Robbins, portfolio management or whatever, Ray Dalio's or whatever. They're still up a decent amount. But if they see another 10-20% drop, I've said this, they're going to capitulate and sell, which could give you a larger drop than anyone expects. Like a huge wick down. Another drop on the Nasdaq at least. Maybe another 40% drop. And another reason why that might happen is because of such horrible corporate earnings for the rest of this year and shit blowing up, like ARK Fund blowing up, Kathy Woods. So, like, things are just going to start blowing up. Here's a canary in the coal mine. It's financials, right? So, all right. So here's when I think the real Powell pivot is going to happen. When financials are in deep trouble. So they put out last week a stress test out of nowhere that they did on the banks, and they're like, the banks could handle a severe downturn. Why would they do that? It's like they're signaling to the market. You know, it's funny because technically that's signaling to the markets that they're willing to do like another 1% rate hike or something like that, right? Meanwhile, the markets are already pricing in recession and the Powell pivot, which means they're kind of smart, but they're kind of stupid too, because they don't really understand the implications of all that. The massive inflation and the fact that what is the Fed going to do when the recession comes? Are they just going to print trillions again? I mean, what do you think that's really going to do? It's going to destroy the economy because we're going to have runaway hyperinflation, right? But here's the thing, financials. I think this is when they really will stop raising rate. Financials dropped to around 400 or 390. So this is the SPF, financials for the S&P 500. I think this is the capitulation. And we've got a ways to go, right? From current price of today, which is Monday morning. Today's the 27th June. 26% drop. Let's compare that. Where's my compare? To the S&P 500, which is orange. Wow, they really track each other. Where would their bottom? It would probably wick down a little bit. So 17%. It doesn't matter. This is my green line right here. Take the S&P away. This is what I'm looking at. This is a weekly chart, by the way. And this could happen quickly within the next 2 months. It's just, I don't understand what they're doing. What the current managers of the economy are doing. Right now, everyone's just buying the dip. Like, back to normal, bounce, everything's going to be okay. I don't know. Alright, let's look at the S&P 500. It did hit my blue line. It's bouncing right off. Let's go to a daily chart. I think this is going to be short-lived. I bet by the end of this week, the market is lower than where it's at right now. The S&P is at 31,500. I think by the end of this week, it'll be lower. And at any time, for any reason, it could just sell off. There's no reason besides speculating to go long like growth stocks, equities, all this shit, because it's still all in the bubble. Where's my indicator? All right, let's see how strong this S&P bounce really will be for this week. Let's start off with a monthly range just to see where it's at. Oh my god, perfect 9 sell. I keep forgetting. Well, I went short. I mean, we've been making tons of money with our shorts. It's on a 5 count to the downside. Technically 6, 7, 8, 9. On the whole month of further selling. My Ishimoku cloud is still green on the monthly. Still like it's still in the green cloud. That's what I'm saying. This in the grand scheme, if you zoom out, man, it's a dip. It's not even a correction yet. And people are already acting like it's the end of the world. That's why I know it's not over, this bear in equities. The weekly tells me absolutely nothing. Let's look at the oscillators on the monthly. I'm curious. Yeah, we got a lot more on the monthly downside to go. 3-day chart. Yeah, the 3 days telling me this is just a little dead cat bounce. By the way, the moving averages are doing a death cross right now. Yeah, oscillators, they're not really ready to cross back up to the upside. It looks weird. There's no momentum. I really don't see momentum in this. Here's a daily. That'll give us a better idea if there's really momentum. By the way, this is not how bottoms form. It's just a short covering. That's really what, in my opinion. On the daily, oscillators look like they have some momentum to push us a little higher. A little higher. Let's take a look at the 12 hourly. This is the S&P 500 that I'm looking. Get a good gauge of the little upward price action the past. I think this is gonna fail. Yeah, this little rally here, it's probably gonna end by Wednesday close. 6 hourly. Here we go. 6 hourly. It's on a 8 count, so the sell-off we could end today in red. Let's look at the 4 hourly. It's a 3 count. So I would really put a lot of weight on the 12 hour and the daily. The 12 hour and the daily and the, I don't know, like it could get a little momentum here. It all depends on follow through with momentum, and anything could derail that. Oh, by the way, this weekly chart on the S&P, this is what I'm really looking at. Like at least get back down to that blue line. Another 20% drop. Zooming out, it would make sense if we're going into recession. The Fed is still hiking rates this month. They're doing quantitative tightening, which is rolling off like over 300 a lot. Like I forgot what it is actually. It's billions are coming off every month, which is getting sucked out of the stock market, which is also putting more home debt, real estate debt onto the market. It would make sense, and it'd be nice to see this week and lower, and then finally like a couple weeks of just crash capitulation wicks all the way down, and the wicks maybe below my blue line, just like it did in 2020 for COVID crash, and then the Fed capitulates into towards the end of Q3, beginning of Q4 this year. Then we get a nice bounce, rebound, doesn't make a new all-time high, and then I don't know, we'll take it from there. As of right now, I'm just going to see what happens today. Like, I don't think there's going to be follow-through with this little rally we have going on from last. It's really a gut feeling. People say never trade on that. Oh, I have a 9 sell on the hourly. I want to do a Q&A, like a Twitter Spaces Q&A live. Like anyone could well, not anyone. If you raise your hand, I'll click on you and you could talk to me. And that'll be, I'm going to try to get it streaming live on YouTube. I hate streaming because, like, I don't know if it's a real person or an algo, but they're watching, they're watching you if you say anything. And then I always have issues with that, and I haven't done it in a very long time. But I'm going to try it. We'll see how it goes. I'm sure I'll have technical difficulties as always. You got to set up like a bunch of things. Maybe I'll do I just want to have the sound from the Twitter Spaces where you guys could hear it on my laptop and streaming live on YouTube without having feedback issues and having an echo and stuff like that. So I gotta like set that up and somehow make it work. And running a Bluetooth because I don't want to talk through my my mic here. I gotta figure it out. I want to do that this week. I also have to have a private group meeting with everyone in the private chat group. Listen, guys, I'm looking to. There's going to be massive opportunity on uranium, massive opportunities on natural gas stocks, massive opportunities on oil. I just want to see oil like get back down towards the 90, you know, and then there's massive energy stocks to buy, like huge opportunities, because this will be the commodity and energy super cycle this next 3 years or who knows how long, right? You don't want to miss out on that. Gold and silver, they're gonna have their day. By the way, when the Fed pivot and they capitulate, right? Here's gold. When they capitulate and pivot, like it's gonna be huge for gold and silver, and it's like really making a nice bottoming here. We're gonna get another giant cup and handle once gold gets back up to 20,000 or 2,000, right? Just another giant cup and handle. Is it gonna go up there right now? I'm still waiting. Like gold is already smelling what everyone else is smelling, which is the capitulation. But the stock market needs to dump another 20% for them to do that. And they could temporarily shoot it back down around, I don't know how low, but at least back down around 1760. I want to see it get back down there, gold. And then silver will probably break down to, I don't know, $18, something like that, right? Here's silver. It's at 21 right now, 21.50. So when there's margin calls and all that, I'd like to see it get back down at least the low 19. It's probably not going to go any much lower, to be honest, which is not that big of a move. Can it wick below my blue line on this weekly? Yeah, temporarily. If the market really gets that capitulation, retail investors capitulate and the stock market drops 20-30%, wicks to 30% down from where it's at right now, and during that there'll be margin calls and whatnot, and then it'll probably they'll sell everything and silver will dump hard. Can it go back down to, like, okay, I mean at $17 I'm buying stock. Physical, I already bought my physical. If you want to buy physical, you could probably just buy now because the premiums are going to stay the same. I'm talking about the paper markets. So mining stocks, stuff like that. ETFs. I'm waiting for another dump with the rest of the equities market, stock market, right? So this is a weekly chart of silver. So a wick down to like $17 when the stock market dumps again, which they need to do, right? Gold, can it fall to 1700? Yeah. It'll probably wick down there. It'll be like a one-day event, and then it'll just shoot right back up. And then the Powell will capitulate soon after, and that'll be it. You're either on the train or it's leaving without you, right? So this is what I'm looking at. Like, ooh, boom, and then shoots back up, little sell off, and then off to the race. If we look at a monthly chart on gold, it's a giant bull flag. Look at this. Like, it's just a giant bull flag, guys. Like, it's pretty obvious. Anyone who says gold is shitty, they're gonna, like, it. Do I have to show you anything else? This is all you need to see. It's been trading range bound in a giant multi-year bull flag, and then it's just gonna shoot out and it'll have its day, right? All right. Also, I have a couple stocks I've been putting in the private group to short, and I think those will work out, especially during a recession. And because we're a little late to short these, but I'm fine not shorting these. I'd rather not short these because they could have violent moves back up to the upside temporarily, and then your call options and your naked shorts get wrecked, and you could get wrecked shorting. So I like just going long the VIX most of the time with my core shorting positions, my hedges on my entire portfolio, SQQQ, stuff like that, right? I like longing volatility and inverse ETFs. That's the safest way to hedge your portfolio, which most of my portfolio is commodities, energy, metals, and agriculture, right? I'm already set up, but I did raise a lot of cash, meaning I sold a lot of that months and months and months ago, and I'm flush with cash, and I've been shorting the market this entire time, but I do not think the shorting opportunity is over with. I'm just kind of looking at this bounce, and I want to figure out, is it going to go any higher? Right now, I'm just going to see what happens today, and then I'll let the private group know. All right, but you guys do, if you're not in the private group, you're on your own. Like, you got to figure that out for yourself. I'm just really talking out loud and giving you guys my thoughts and opinions on the macro stuff and what I'm doing and thinking about. It's not financial advice, all right? Because these are very turbulent markets right now, all right? Smash them like, share my videos, leave anything in the comment section. Until next time.